Hussam, welcome, and thank you for everybody who's made it to today's session. So it's actually a privilege to be sitting next to Hussam, who I've known for quite a few years, and I've actually seen the evolution of Tabby from the early days. So, introductions first, sorry. My name is Arjun. I work for a firm called Arthur D. Little.
I'm Hussam Arab. I'm the co-founder and CEO of Tabby. Good to see you, Arjun.
So let's start with simple. Let's start with what I call the state of the nation of BNPL, right? The narrative is always, or has been quite consistent for the years, that BNPL is encouraging people to take on more debt than they need, and they're spending their money on stuff that they don't actually need. How true is that?
So I think it's become fairly clear over the last few years that there is a clear place for buy now, pay later in the ecosystem, if done right. And buy now, pay later, as far as we see it, is a great solution to provide financial flexibility to and financial access to a broader set of customers, right? But back to what I said, it needs to be done right. And on your point around indebtedness, that is obviously part of, or a potential problem, is will people be encouraged to take on more debt? But I feel that is down to responsible players to ensure that they're doing this the right way. And I think one of the most important things that we think about when we think about providing debt to consumers or providing credit to consumers is this a consumer that can pay us back? Are they able and willing to pay us back? And if so, then we are providing access to the right customer. The incentives in buy now, pay later are very, very different from the incentives in pure credit. In pure credit, it is actually in the best interest of a financial services provider that the consumer takes their time to pay them back. They make their money through interest. Whereas with buy now, pay later, it's very, very clear. We make our money from the merchants, and it is in our best interest, and actually we are better financially if the customer pays us back on time, and therefore we need to ensure that the customer is willing and able.
So Hussam, talk a little bit about, I read a report you guys published about a month or so back, maybe a bit longer. It was very interesting, and I think the overarching statement was more people are using BNPL for essentials rather than discretionary spend. Talk about a little bit of the highlights which came out of that report. Where was the report constructed?
Yeah, we worked on this report because of some of these fears, right? The common misconception is that people are using it for their excess discretionary spend. And what we saw in our data is actually quite the opposite. We saw that customers are more and more starting to use this for their essential spending. It definitely started with a Gen Z type of consumer buying their fashion, their beauty products and things like that. But it has evolved, and it has evolved in a very, I think, positive manner towards essential spend. So what we're seeing today is a lot more spending on things like healthcare, education, insurance, all segments of the economy that are actually quite key, where the consumers continue to see little access or little service from the traditional credit providers. So I think that shift has happened. What we saw in our data is today, essential spending is 2x the level of discretionary excess spending, if you want to call it that.
Interesting. So my view on BNPL, and I've written quite a lot on this topic, is that I think there is this need for liquidity at the point of need, right? And there is an overarching assumption that everybody has a credit card, which is not true, right? And I think for the fact that you can provide that person with the need of liquidity, help them manage their cash flows better, there's got to be actually value in that. And this is where actually I want to go to the next question. If you see the shift globally, and I'm starting to see a similar trend in this part of the market, BNPL is now entering sectors that we would have never imagined, right? I go back 10, 12 years ago where it was a Gen Z going for the weekend to buy a dress or a shirt which they were going to wear to a party. It's moved on there's fly now, pay later, there's remit now, pay later, there is study now, pay later. Are we seeing a similar shift in the region? Is it gaining traction? And do you see that, I won't use the word proliferating in the negative sense, but do you see a lot of that happening going forward?
I think it's a sign of maturity of the product. It did start, as you said, as a Gen Z type product for these instantaneous purchases. What has happened is consumers have seen the value in it, and I think what they've seen specifically is the value of a transparent, consumer-friendly product without the high interest rates that come with traditional credit. And so, as we've seen that mature, it has started to proliferate into other segments. Actually, in this market, very much so. So just over the past few days, what we've seen, I've met with a number of companies that have provided it for studying, so for education. We've seen some sectors in the rent now, pay later, so paying for my annual house rent over installments. We've seen some companies starting to do it on the B2B side, so construction installments and office supply installments and things like that. So what is clear is the form factor of buy now, pay later has struck a chord with customers, and on the other side, there are players that are willing to provide that service and have seen that opportunity. I think for us, the opportunity continues to be exciting around our core offering of buy now, pay later, but we definitely have started to expand into some of these other areas naturally, as you might imagine.
So I'm going to come to that in a minute. I'm going to ask you a question. So in my humble opinion, the banks, I don't know if they see this as a lost opportunity or they don't care about it, right? One of the two. But now with BNPL entering the B2B segment, right, where it starts to get, if I may use the word tasty, in terms of the size, in terms of the scale, right? Two questions for you. A, do you see a similar trend in B2B BNPL, despite or in spite of the fact you might choose not to play in it? And secondly, do you now start to see banks get more interested in the BNPL space? Because my view on BNPL from day one has always been clear. There is not a better and a cheaper cost of customer acquisition tool in the market than BNPL. But a number of banks actually chose to avoid it. So I guess a number of questions out here. Do you see B2B BNPL? How do you see the banks respond?
BNPL at the core requires a instant transaction. Right? That's how it typically works. So in our market, are there B2B marketplaces? I don't think we've seen many of. There's been a couple here and there. And so the specific BNPL use case for B2B, I don't think exists yet, and I see less of an opportunity there. However, financing for B2B is definitely another missed opportunity by the banks. The banks have historically, and I don't think it's a secret to say over here, is they've had very cheap sources of capital and that they haven't needed to return back to the customer. So it's been very, very profitable to not do much. And so they've missed out on buy now, pay later as an opportunity. I think they've clearly also underserved the SME. So one of the key demands, one of the biggest demands that we've seen ourselves over the last few years is our merchants come back to us and ask whether we could finance them, for the reason that their banks are not providing them that access. And so absolutely, right? And I think for us, it is part of kind of empowering the ecosystem and empowering our merchants to then be able to grow and offer more to their customers. So it's an area that we're very interested in and can see ourselves working on soon. So
now let me switch the conversations to about Tabby, what's happening now, what's going forward. So I firmly believe that BNPL is an extremely good case in point that there was an underserved need, right, which got solved with, I would say, limited innovation, right? The BNPL in its truest sense might have existed for a millennia, if not longer, right? Obviously, it got digitized, e-commerce. It's now come into offline commerce too. I think a lot of people don't actually understand how rapidly it is actually growing in offline commerce, if not actually faster in offline versus e-commerce, right? I could argue that the similar challenges exist in adjacent financial services products too. You mentioned lending, you could argue embedded savings, wealth, investments, and so on and so forth. So firstly, congratulations on the recent announcement of on the acquisition. How does all of this sort of impact the way you guys are now seeing the future? Are you going to be a lot more than just a BNPL, a lot more than just a lending player?
I think for us, the way we've seen it and thought about it historically has been, do we have the right to play in a certain segment? And that right to play is largely determined by the customer. Have we built that type of relationship, or do we have that type of perception with the consumer to allow us to get into a new segment? And I think for us today, there are certain areas where we believe we've achieved that already. There are other areas where I think we're still quite distant, right? So can we see, or does our customer see us as a potential tool to go out and make instant purchases outside of credit? Can they start to spend with Tabby? Can they start to save with Tabby? I think these have been part of our natural evolution, and I think today we're in the right place to be able to offer that, and hence why the Twig acquisition makes a lot of sense. There are other areas which we believe are for the future, right? Investments being one of them. Have we built that relationship with the customer today to give us the right to go back to the customer and say, hey, do you want to invest with us? I think that is a bit more distant. So back to your point, it really is around, I think, initially the right to play, which is determined by the relationship that we built with the customer. Do we have that trust that we've built with the customer? And also, I think quite importantly, do we have the right set of data points internally to allow us to play in that space? Right? We want to be able to leverage the existing data that we have in order to give us that advantage compared to some of the incumbents in the space that are probably quite specialized.
Okay, so this beckons an interesting question, right? So you use the word right to play. Let me take it to the right to win. So you have access to customers, there's no doubt about it. You've amassed a large customer base, no doubt about it. You've gotten to know that customer base well through transacting, no doubt about it. With all the technology, AI, data science around, you can actually build profiles and portfolios and so on and so forth. Question for you. How does someone whose positioning statement is one of buy now, pay later, reinvent themselves in the eyes of the customer that they can be seen as a credible financial super app? I don't like using that word, but let's go with that because it's easily understood, right? One. Secondly, you said it yourself, you start competing with a much wider segment of competitors who are specialists quite deep in that space, right? And you start owning a relationship which is multidimensional, right? Which only traditionally the banks have actually ever been able to do, right? They're the only ones who've kind of had lending, saving, investment relationships. We don't really have financial super apps which are that complex in this part of the market. So a couple of questions and then I'll come to the third one. One is, how do you reposition yourself in the eyes of the customer? Trust I accept, but their trust is very much driven by product. Secondly, what does Tabby need to do differently to be able to take this multi-pronged competition which emerges?
On your question on right to win, I think we need to have the right to play first. And so once we believe that we're positioned well to be able to play in that space, I think that then comes down to execution, what we can leverage internally to be able to allow us to win. Now, on your question on that perception of the customer, I think that's the biggest challenge. Is historically, customers have seen us as a payment method that sits on checkout. That's all. We are a payment method that sits on checkout. Why are you coming to me today and telling me to save with you? It's not that natural. And I think it needs to be crafted very, very carefully, and it needs to evolve in a manner that the customer doesn't find surprising. And so the way we see it is the natural evolution today is credit to spending, So we've gone into spending in a couple of markets and you know, instant spending and the Twig acquisition again will provide us with a debit card that allows the customer to go out and use a debit card, not just a credit product, and then get into savings and things like that. So you know, we strongly believe in the natural evolution of a product pipeline rather than rolling everything out in one go and hoping for the best. On your question on the incumbents, I think these guys
or more
are
the competitors. They can be incumbents and new kids on the block.
Absolutely, and in most cases they will be more specialized and better funded in that particular area. And I think we again need to leverage what we best have, which is the relationship with the customer. And we need to bet on ourselves to be able to believe that we are listening to our customer better. We are a bit more agile when it comes to product development. But I think a lot of people can say the same thing. So it does come down to execution at the end of the day. And if we do believe in ourselves and our ability to start to broaden our offering beyond the initial service, then you know, that's the direction that we want to go in.
Good. My last question, right? And I guess it comes back to where I think we sort of started. What role do you see banks playing? And what role do you see banks playing potentially in partnership with you as you expand from being just a BNPL player to being you know, a multi-solution player in the market?
I'll probably refer to an example of in my previous life. So my previous life where we had set up an e-commerce business, we went to the traditionals. We went to the retailers and wanted to partner. And in the early days, there was a lot of resistance. And the resistance was essentially, hey, we know this better than anybody, we can do this better than anybody, and therefore we do not need to partner. And I think we all saw what happened with e-commerce and how over time retail shifted and shifted hard away from offline. I mean, offline is still obviously a big chunk of it, but there did become a reckoning at some point of you know, we need to play that game as well, and we cannot stay out of it. I think with banks and traditional financial services players, we've probably seen an earlier understanding of that need to shift, right? So that's a positive. I think, you know, with some banks it was we need to do it ourselves a lot earlier, and other banks understood that probably the best path to market is through partnership, and we've done a number of these partnerships very successfully in the past. So, you know, I think the positive message that I probably want to leave with is the banks in this market have been a lot more, or have had their eyes open a lot more, a lot earlier than we would have expected, which is great because that allows us to do the things, to work with them on some of the areas that we just don't have access to. Simply areas like BIN sponsorships and card issuance and things like that. We're going to have to partner with banks, and it's great to have an audience on the other side that is willing to listen and willing to work with us.
No, Hussam, I agree with you. I think banks can play, and you know, with the regulation shifting with, you know, open banking, open finance, banking as a service coming, and the fact is that you guys will need more and more of either regulatory cover, compliance support, balance sheet support. I do think the banks have a role to play. I think there's a healthy co-opetition opportunity which might actually come around soon. I think some of the banks will go for it. I think others will be a little bit more, if I may use the word, obstinate and you know, want to go through the motions whether they succeed or not. Having said that, any closing thoughts?
Thank you very much for the time.
Appreciate it. Thanks a lot. Best of luck. And you know, we're looking for the next 5 years and seeing what Tabby is doing then. Cheers.
Thank you.
Thank you.